Welcome to Explain the Charts, where we dissect financial markets, providing actionable insights for informed trading decisions. Today is November 4th, 2024, and we're analyzing the SPY, the S&P 500, to uncover potential trends, reversals, support and resistance levels, and key price levels to watch. We'll begin by exploring the latest market news and events related to SPY, then dive into a thorough analysis of the chart data. The market is currently reflecting uncertainty about the upcoming presidential election, with polls showing a tight race. Additionally, the Fed's rate cut announcement has caused mixed reactions, with some investors remaining cautious. The recent solid earnings season has provided a boost to the markets, but the election uncertainty is keeping investors on edge. Let's now turn our attention to the charts to see what the technical indicators are telling us about SPY's future direction. Taking a look at the daily chart of SPY, we can see a clear upward trend in the price action. Over the past few months, SPY has consistently been making higher highs and higher lows. This suggests that the bulls are in control, and the market is generally bullish. However, we can also observe a recent pullback, with the price consolidating near the 435 level. This consolidation could be a sign that the market is trying to regain momentum before making its next move. It's important to remember that this is just a brief overview of the daily chart. We'll delve into specific ranges of candles later to understand the dynamics of the market in more detail. But first, let's look at the 1-hour chart and see if we can get a better grasp of the short-term trends. Switching to the 1-hour chart, we can observe a more granular view of the price action. While the daily chart shows an overall bullish trend, the 1-hour chart reveals some interesting fluctuations. The recent pullback on the daily chart can be seen more clearly on the 1-hour chart, where we see a series of lower highs and lower lows. This short-term weakness might be linked to the current news environment, with the election uncertainty weighing on sentiment. However, it's crucial not to overreact to short-term fluctuations. We need to consider the broader context and the overall trend on the daily chart. The 1-hour chart is a helpful tool for identifying potential entry and exit points, but it's not necessarily indicative of the long-term direction. Now let's shift back to the daily chart and examine a specific range of candles to get a better understanding of the support and resistance levels. Let's focus on the last 30 candles on the daily chart, spanning from the beginning of October. We can clearly see a major support level around the 420 price area, where SPY bounced back during the recent pullback. The 435 level appears to be acting as a strong resistance level, with the price failing to break above it multiple times. The 435 level could be considered a key price level to watch, as a break above it could signal a continuation of the bullish trend. Conversely, if the price falls below the 420 support level, it could indicate a shift in momentum and potentially a bearish turn. The 15-minute chart provides a more immediate view of the market sentiment, but the daily chart is more crucial for understanding long-term trends. Now, let's zoom in on the 15-minute chart to analyze the current market dynamics. Looking at the 15-minute chart, we see a very active market with rapid fluctuations in price. This reflects the ongoing uncertainty and volatility in the market, influenced by the election and Fed news. The 15-minute chart can be quite noisy and difficult to interpret for long-term trading strategies. However, it can be valuable for identifying short-term trading opportunities. Currently, the price is hovering around the 571 level, which could be considered a potential support level. A break below this level could trigger a short-term decline, while a break above it could indicate a short-term rally. The 15-minute chart is best used for quick trades, as it reflects very short-term sentiment and can change direction quickly. It's important to keep an eye on the broader context and the overall trend on the daily chart when making trading decisions based on the 15-minute chart. Remember, the SPY is a large-cap index, and its price action is influenced by a variety of factors, including economic data, political events, and sentiment.